Let's review our trades for today. Today is Thursday, September 14th of 2023. We did quite a few trades in our main option trading account. First, you see we bought to close the PLD September 15th 120 put option for 15 cents per share. And the reason is that it looks like as of right now, this isn't confirmed yet, but tentatively it looks like it's going to be announcing earnings before the next option expiration cycle. So we wanted to get out of that and look to go back into a new position in PLD after earnings. Next one's a new trade. We sold to open the LAZ October 20th $32 cash secure put options. So we'll put our charts up here. Before I do that, let me show you we got 60 cents per share for those put options. So here you see the charts of LAZ. And notice here in our daily chart that it's been finding nice support right along this area right in here, just below our green 50 moving average. It's kind of been oscillating around the green 50 red 200 moving averages on this daily chart. And today was a fairly high volume day, as you see here, higher volume than average over the past 50 days. And sellers sold it down, buyers bought it up, and ended up, we didn't move a lot, but we ended up 23 cents higher, or 0.7% for the day. So we expect it to keep finding support along this moving average. Now keep in mind anything can happen, but odds are, as of now, that's what it wants to do until it figures out if it's going to solidly break out above that moving average or possibly get stuck below it. Now looking over here at our weekly chart, we see over the past couple of months that buyers and sellers have been fairly equal. I might say buyers have a slight advantage, but not really much. I'm just basing it maybe on this 1 week here. We had very light volume on a down week, and the week before was fairly high volume on an up week, but pretty much even. And again, we see that it's made a higher high here, made a couple higher lows here, and appears to be trying to form a new low here. So if that happens, then we'll do well on this position. This is a position I like to add to. I'd like to sell the $31 put options, but we're okay selling the 32. Not quite as safe, but still right there at or below support. Our next trade is OZK, Bank OZK. So we bought to close the OZK September 15th 40 puts, and then notice this expiration. We sold to open the OZK October 27th. So that's not the third Friday of October. If I remember correctly, that's the fourth Friday of October. $38 put options. We had to go out that far in order to get it rolled down for credit, and I wanted to get it down as much as possible, and we had to go a little odd number there, 38. We're able to get a 35-cent credit. So let me just show you the chart here, what's going on with Bank OZK. So see that it was finding nice support, it was riding the 50 moving average. I was doing well, then it broke below it, then it broke below the 200 moving average. Now those are serving as resistance for it. So because of that, we want to get this $40 strike price down, and we were able to get it right at the money. So right where it's been finding support over the past week or so. Don't know if that's going to hold, not super confident, but it is an area back in here that served as resistance back here in April. So might hold, not super confident. We'll see here that sellers have shown some good strength over the past couple of weeks. They've shown more strength than buyers. So we'll have to see how it plays out. Something to keep in mind here is that they are scheduled to announce earnings during this next cycle. So we'll be in this trade through earnings unless something unique happens. It is, however, trading right around the 200 moving average on this weekly chart. So will that hold? Well, we'll see. Sellers haven't shown tremendous strength over the past couple of months, except for this one big high volume week here, and part of that could have been buyers. Since then, although sellers have had control, they're not doing it with a ton of volume. Before that, buyers were strong. So kind of position is kind of meandering, and we just want to get it down, so we were able to get it down as we rolled it out. I had to go one extra week on top of that third Friday of the month. All right, Realty Income, ticker symbol O. So we had to kind of work this position a little bit. So we bought to close, and we were in 2 of the September 15th 60 puts, and we doubled that to 4, but we rolled it down to the $57.50 put option and rolled it out to November. So bought to close the Realty Income September 15th 60 puts, sold to open the November 17th 57.5 puts, and sold twice as many of the November 57.5 puts as 60 puts that we bought back. We were able to get $55 minus commission for this trade. Now, I would love to got this down to 55. As you can see, a Realty Income, it appeared to be finding support right here around this $56 area. And then about a week and a half ago, it broke below that. So now we're actually below, if you look over here at this weekly chart, we're below the support from October of last year. And that doesn't bode well for the stock holding. So we'll have to see if it does hold. It's trying to find support here, but doesn't look like it's very likely right now because volume is still high. Now this week, if we have a nice day tomorrow, then it could end up holding support here around this, around 54.73 to 55. So it's trying to hold support there, but then it did that several weeks ago and then it broke below it. So we just wanted to improve this position. We were up here at 60. We could have taken an assignment and turned it into a covered call. And I wouldn't have been upset if this was assigned to us, because we get that monthly dividend and start collecting the covered call premium. But if we can get it rolled down, and we have plenty of room to add to this position, that's why I decided to go ahead and just roll it down instead of letting it be assigned and roll it out. And now we improved it by $2.50 per share if we end up getting assigned. And we'll see what happens between now and November if we get assigned, or if we're able to roll it down, or maybe Realty Income finds support and goes back up. All right, the next trade is PSA. So overnight we were assigned 100 shares of PSA at $3.10 per share. So we had to sell this covered call option, $30 per share less than we were assigned at. Now we have been collecting nice premium by rolling put options over the past year and a half. We've been in that position for quite a while, but we did get assigned a lot higher than what it's trading at. So we sold the PSA October 20th, 280 covered call, and got $4.50 per share. So some nice premium there for that covered call. And let me show you why I did that. So I thought about selling it up in here around this 200 moving average, but just didn't get quite that much premium. So I sold it right in here. And the reason, if you notice here, this area, this 280 area, it's an area that served as support for it. Even go all the way back to October of last year. So almost a year ago, this area served as support for it. And now that's broken through it. Notice that it turned into resistance several weeks ago. So thinking is that same area is right here with this green 50 moving averages on the daily chart. So that should turn into resistance. Of course, anything can happen. Anything can happen. So we'll see what happens. But if it follows what it's been doing, it'll come to this green 50 moving average and then find resistance there and come down. And it has yet to make a higher, lower, higher high. In fact, it's made lower highs and lower lows. So we're still trying to see where public storage is going to find support at. And you can see that kind of, it drifted sideways for a while, for about a year. It drifted sideways, but now it kind of broke below that. So we'll have to see what happens if it does end up finding support. But we got some nice premium. We dropped our overall cost by almost $5, $4.55. So I like that. And then we'll see what happens between now and October 20th. All right, then 3M. So we exited a position in the past week or so, and we just added back to it because 3M had a big drop. So we sold to open the 3M October 20th 100 put and bought the 75 put for just some really super cheap, out of the money protection. Pocketed $1.46 per share for that credit spread. Put our charts up here. So we got out of our 3M cash care put option position when it was up in here. Now yesterday with a big drop. What happened yesterday? It dropped around 6%, 5-6%. It's a big drop yesterday. Today appeared to calm down. So I decided to go ahead and just sell that $100 put option, which is right at the bottom of this upward sloping trading channel. Go ahead and sell that. And we will add this position if the opportunity remains there and the return stays sufficient. But I want to take advantage of the opportunity with a little bit of increased volatility from the big drop yesterday. Notice that in one day it eclipsed all the gains it had made for about the past two and a half weeks. So volatility spiked a little bit and we got some nice premium for that $100 put. And now we'll kind of see what happens and look to add to this if we can. All right, now our final trade is NEP. So if you remember, we're in a covered call position in NEP. It was assigned to us a bit higher than where it's currently trading at. And so we're selling some bearish call credit spreads against it to help increase our cash flow on top of the covered calls we're selling. Now I'm doing this slowly. I'm going to show you why in just a second on the charts. But the trade was that we sold to open the NEP October 20th, $55 call option, and bought the 70 to cap our, to give us some protection. We pocketed 65 cents per share for this. So the reason why I'm adding slowly is that notice over the past week, the NEP has had a really strong advance. And volume isn't that high, but it is advancing. Now, I'm anticipating it to find resistance at this green 50 moving average like it did back here in July and like it did back here at the end of August, beginning of September. So we'll have to see if that pans out. But it was a big up candle today, so that's looking pretty bullish. Very high volume, that's looking bullish. So because of that, even though we're selling this call option, $5 out of the money, so about 10% out of the money, I still want to be careful and add slowly. So I'm going to see what happens tomorrow. We may take a breather tomorrow just to kind of see, does it pierce this green 50 moving average? Or if it looks like it is bouncing off that, I may go ahead and add some more. We are in 4 covered call contracts. And I'd like to have 4 bearish call credit spreads to match it at that $55 level. That just helps us collect some premium to help repair that position. So we'll add to that a little bit slower. Notice the NEP is in a bearish trend on this weekly chart. It's made lower highs and lower lows. However, on the daily chart, notice that we did make a higher low here. The question is, will it make a higher high? We'll have to break through this area right here. It looks like the previous wave's high was right around our green 50 moving average. So I have to push through there in order to make a higher high, which will confirm this switch from a downtrend to an uptrend. So we have a few more positions that expire tomorrow that we may let be assigned to us or adjust them somehow. And of course, we have some capital available. We've closed out quite a few positions, so we do have some capital available for new positions, and we're always looking for new opportunities. So that's all for today. I hope you have a good evening.